in terms of that path, which really, I mean, it must be your focus, I imagine. How much does regulation and your concerns about regulation fit into the mix when you think about what you're going to tell investors and your promises of getting this company to profit?
Yeah, I mean, different for us, regulation has been a part of our history from day one. You know, we are as much in the transportation business as we are in the technology business, and transportation historically has been a regulated industry. Within our first year of operation, we worked with California regulators to create a new category for regulation. So it's been part of our business. It will always be part of our business. It's part of how we think about the path to profitability, but we're basically moving forward on that path despite anything that's going to change around us in terms of regulation.
How closely are you watching what happens next, though, in Congress? Because this is the most broad effort by Congress to do something to break up the larger companies. I mean, clearly you're in one area, and you're not really sort of in a whole array of areas, vertical or horizontal, so I suppose it affects you less. But it's definitely for sure that it's going to impact the operations of bigger tech, of privacy, the amount of freedom that you all have, essentially, it would seem.
I mean, again, the inquiry is focused on companies that are very different than ours. We're in the transportation business. We use technology for sure. Scrutiny is important. Competition is extremely important. We've learned that by, punching up. We've had heavy competition in the early days. People thought Lyft couldn't make it, and we've continually increased our market share as we've been more and more competitive in our space. And so we're focused on what we do. We're focused on our mission to improve people's lives with the world's best transportation. And again, I think scrutiny is needed, especially at times like this.
One of the places you are being scrutinized, of course, is this whole ongoing issue of how gig workers are treated. And I know you make the argument that many of your drivers work part-time, and therefore that puts them in a different category. What will happen if some of these moves go against you? And I'm talking about your cost structure, really, John, and path to profit. If that proposition in California goes against you, what does it mean for you?
Yeah, I just want to start by saying I think, my opinion is less important than the driver's opinion. Drivers 4-to-1 want to remain independent contractors, want to maintain the flexibility, 80 to 90%, depending on the market, drive less than 20 hours a week. And so we think there's a much better way forward than saying everyone should become employees. And that way forward is to say, let's maintain the flexibility and let's add more protections and benefits like we're pushing for in California.
Those drivers that were driving less than 20 hours a week, can you give us updated numbers on who's driving in the pandemic, how many hours Lyft cars are even in service during the pandemic, John, and how it's changed over the last 7 months?
Yeah, the impact to us, broader market of rides being down about 50% now. They were down 75%. So we're halfway recovered across the board. That impacts individual drivers as well. But as you look at how some drivers have shifted, we actually have higher driver earnings now than even pre-pandemic, because there's kind of an equilibrium between demand and supply between riders and drivers.
Well, can you actually put a little more data on that when you say higher income? Is it fewer drivers? Is it income per hour? How are you calculating that?
Per hour.
Yeah.
Yeah.
And John, you mentioned in terms of the declines caused by COVID, some regions have picked up again. Vancouver, back to above 100 from pre-COVID. But we all have this fear, of course, about second wave and new shutdowns. How big a concern is that to you? What does it do to your business, and how worrying is it if we do see shutdowns once again?
Look, the impact to the broader economy, the impact with lockdowns and the virus is real for our business. Transportation is directly tied to people's movement and the broader economy. That said, we've continually, week over week, seen incremental improvement, going from negative 75% to now above 50%. As you mentioned, in Canada, we see markets like Toronto back to 80% of where we were before. And so I think as countries get better, as states get better at living with the conditions we have because of the virus, I see continued improvement. We also have a diversified set of transportation we offer. We have the largest bike share program in North America with City Bike in New York City, Bay Wheels in the Bay, Divvy in Chicago. And our bike systems are, in many cases, above where they were pre-COVID because it's a great way to get around, get some fresh air, and not be next to someone else.
John, tell us more about what you're doing for those drivers that had been loyal to Lyft and just find themselves with no one to take anywhere these days. What have you been able to do for those employees, particularly given the fact that since they're not employees, they don't have benefits, they don't have healthcare, they don't have all of those extras?
Yeah, I mean, actually, as I mentioned, driver earnings on an hourly basis are higher today than they were pre-pandemic.
Right, but you did mention per hour, and there are obviously fewer hours and fewer drivers, so that's not unusual, but it doesn't mean that it's across the board.
Yeah, I mean, we're looking for right now more drivers. We've added safety protections. We have a personal health certification that every driver and rider needs to certify before taking or giving a ride to wear a mask. And we're working on new policies like in California, Proposition 22, which provide additional healthcare protections, healthcare funds, driver earnings protections. And I'd like to see more of that across North America.
I do want to ask you about, obviously your big competition is with Uber. You've got this partnership agreement with Grubhub in certain markets. How important will that be, and relationships like that, to let you go head-to-head against Uber?
Yeah, so the Grubhub relationship is part of Pink. Pink is our subscription service. And the idea there is, instead of owning a vehicle long-term, we think that transportation will move to being a service. Something like when you, instead of buying CDs or DVDs, you use Spotify or Netflix. And as that happens, we want to make sure we give you the best offering. So, for example, with Pink, you can get access to our bikes and scooters. You can't get that with anyone else because we have exclusive relationships with cities like New York City. Competitively, obviously, Uber has a food service, and we wanted to demonstrate that that is not a big differentiator. That is not going to allow them to provide a better subscription. And by subscribing to Lyft Pink, you get free delivery on all of Grubhub's restaurants across the country.